You get your first summer job, put in the hours, and eagerly tear into that first pay stub, only to realize a massive chunk of your hard-earned money is mysteriously missing. It creates a universal sense of panic. High school taught you the Pythagorean theorem, but no one explained how the IRS works. To a new worker, the government can feel like an unbeatable, complex threat looming over a bank account. For most Americans, however, doing your taxes and legally avoiding them is straightforward. The hardest math is already happening behind the scenes. This diagram of a $50,000 salary illustrates a foundational rule called withholding. If you work a standard job, your employer estimates your tax rate. Let's say it's 10%. Before you ever see a dime, your job siphons off that $5,000 and hands it straight to the government. You take home the remaining $45,000. Average taxpayers aren't fighting a massive financial battle alone in April. The system is designed to quietly pay your taxes in the background all year long. The process kicks off in January when your employer sends you a W-2 form. This document summarizes your financial stats for the previous year, detailing your total wages and exactly how much tax was already withheld. Filing requires taking the numbers off that form and typing them into free IRS-approved websites. The software handles all the computational heavy lifting for you. Behind the scenes, the software weighs the estimated tax your job already sent against the exact amount of tax you owe. There are two outcomes. If your job overpaid, the government sends a refund. If they underpaid, you write a check for the balance. Filing a return acts as a retroactive reconciliation between you and the federal government. You also don't have to pay taxes on every single dollar you earn. The government allows you to claim deductions, specific expenses that shield your income. This bar chart shows a $50,000 income dropping via the automatic standard deduction. Alternatively, if you had high medical or business expenses, you can itemize instead. You add up those specific expenses to create an alternate tax shield. Tax software automatically calculates both paths and applies whichever deduction saves you the most money. Once you master the basics, you can move from passive filing to active optimization. This is where the wealthy utilize legal, long-term strategies to lower their tax burden. Many companies offer a 401k account. You deposit a portion of your salary into this protected account to buy stocks, and that money grows tax-free until you turn 59 and a half. You can also buy standard stocks and hold on to them for over a year. At the 12-month mark, they convert into long-term assets. The tax rates on your eventual profits drop significantly, sometimes hitting 0%. Business owners can erase their taxable profit by reinvesting it. Say your side hustle cleaning houses nets exactly $5,000. You can spend that exact amount on a state-of-the-art vacuum. Because it's a business expense, your official profit drops to zero. Most legal tax avoidance relies on shifting your money into these government-approved investment vehicles. Other countries have a much simpler approach, where the government just sends a flat bill detailing what you owe. So why does the US maintain this complex system of deductions and optimizations? There's a popular belief that the code is kept complicated solely to benefit tax prep software companies. While corporate lobbying plays a role, it doesn't explain the full picture. The US government uses these complex tax laws as a massive behavior steering machine to shape society. When lawmakers want society to shift toward renewable energy, they offer explicit tax benefits to citizens who purchase and install solar panels. By offering these targeted tax breaks, the government effectively subsidizes you to start a business, buy a home, and save for your own retirement, reducing the long-term burden on the state. Your strategy moving forward is simple. Keep your basic forms safe in January, use free filing software, always claim your standard deduction, and start researching ways to actively optimize your investments. The tax code operates as a map of financial incentives designed to guide individual behavior.